Here, let's get to Kevin Green, who joins me now for a bit of a data download. Let's just get this construction spending data out of the way first. KG, what are you seeing there?
Yeah, for construction spending, this is actually still a healthy number, just kind of like what we saw last month. That actually increased by 0.3% for the month of December. She was looking for 0.2% in the previous month. That was actually reported because we did have some a delay because of government shutdowns. It was actually 0.5%. So a very healthy level here, especially as we get into the spring and summer months. We should expect construction to start to inch up here a tad bit. And this is going to also help out the economy, which has seen a little bit of a contraction when it comes to construction jobs and manufacturing jobs over the last 6 months if you're looking at the data. So relatively strong, probably not a big reaction when you're looking at the market. Obviously, we have some other news headlines, as you kind of talked about during the open, that's really kind of overshadowing this particular print. But it's a healthy number. We're not seeing anything that's massively decelerating at this point in time. And if we can continue to see comps like this on a month-over-month basis for, let's say, 3 months, 4 months or so, that could actually be another tailwind for GDP.
I suppose there's a lot to construct with everything we're hearing from the tech trade, but just talk us through this PPI print. What does that now mean with a reading of 0.5%? I see it was a big jump in trade services, in fact, the most since 2010, which seems to be the takeaway from this. But just talk us through your thoughts.
Yeah, so we have to kind of highlight first, PPI is a very volatile print, very hard for analysts to really pinpoint what it's going to actually result in. So we did see actually core PPI, which is really capturing the headlines. This is really what's creating some of the fear. That actually increased by 0.8% on a month-over-month basis. She was looking for 0.3%. And if we're looking at the previous print, that was revised lower to 0.6%. So you are starting to see core PPI actually increasing to the upside. And you're right, 20% of this is actually margins for businesses that are doing trade services. Now, Sam, here's the caveat. It's a very low bar. Trading margins or trading services margins, if you're looking at PPI, has been sliding literally for the last year and a half, 2 years. So now you're starting to see that inch back up here a tad bit, which is going to have an impact on PPI. Now, there are other components that have actually impacted this number, but at the end of the day, trading margins or the trading services margins, if you will, continue to be a pressure point. That was actually a pressure point for last month's print as well. If you're looking at the headline PPI, that actually increased by 0.5% on a month-over-month basis. But the year-over-year for PPI or headline PPI is actually decelerating, coming in at 2.9%. Previously, it was 3%. So core PPI is actually the concern, as that is actually accelerating. But very volatile print. It's also the beginning of the year as well, so a lot of the pricing resets are also going to be factored into this report. I wouldn't take too much of this going into CPI. PPI and CPI, there's about a 68 to 70% correlation, so there will maybe be some effects, but not the full effect that we are seeing for PPI.
Okay, good to know. Good to know. And obviously some base effects at work there as well. Let's just talk about the price action we're seeing in oil this morning. Obviously, we've seen an uptick. Just talk us through what we've learned about the US-Iran talks, because I've seen headlines that was positive. I don't know how much more you can unpack there. We've obviously learned this morning we've got Pakistan that's bombed targets in Afghanistan too. I don't know how much of that is having an impact. Not to mention that OPEC Plus is obviously going to be meeting and perhaps even considering upping its production in April, or at least resuming that post Q1. Talk us through some of those stories. Which one is the most significant and having the most effect or impact on the oil markets this morning?
Yeah, so crude oil, if you're looking at WTI, crossed over that $67 level. That's going to be a key area of resistance. We are actually seeing it trade a little bit lower now. Fridays have been very bullish for crude because of the anticipation of a potential military strike between the U.S. and Iran over the weekend. This has been the trend that we have seen, and it does appear that we are maybe at a stalemate, especially when you're kind of looking at the military maneuvers that are taking place right now. It looks like it is escalating. There's also a report that Ambassador Huckabee, the ambassador to Israel, also instructed the U.S. embassy there to evacuate non-essential staff, if you will. So that is also kind of creating a little bit of this buzz to the upside. If you're looking at Pakistan and Afghanistan, not a big mover when you're looking at the oil markets in itself, especially when you're looking at Afghanistan, but just the heightened tensions just in general is probably pushing prices a little bit higher. Get concerned about the OPEC meeting over the weekend if they have any type of bearish events that do take place, resuming production quota levels or increasing those production quota levels over the next couple of months. If they hint towards that, that could be a negative impact when it comes to crude. We have seen that over the last couple of meetings as well. Key area of resistance, let's see if we actually have some follow through. And even if we do, from a military standpoint between the U.S. and Iran, it could be short short-lived, where we do see a massive spike, and then it starts to level out, similar to what we saw last year between Iran and Israel.
Okay, keeping an eye on crude and some of those moving parts. Just wanted to get your quick thoughts on what we've seen as far as tech. If I can just get this to be squeezed in here, KG, with a quick answer. I mean, particularly on CoreWeave, there seems to be worried about CapEx. Obviously here, overshadowing the revenue of 110%. Mike Intrader was just here. I was having a good chat with him. We were actually listening to the OpenAI interview together, and he was saying, look, the demand is there. In fact, he calls it relentless. Obviously not being reflected in the stock this morning, but just talk us through your thoughts on the reaction we've seen post earnings in some of these names.
Yeah, so for CoreWeave, their fundamentals that they report on a quarterly basis is still very volatile because of that increase of CapEx spend. So we are seeing a move to the downside. A lot of that is because of the excess spending as well as margins being compressed. We did see a year-over-year readjustment to the downside when it comes to operating margins. And obviously, it's going to provide a little bit of a concern for the markets, at least for now. I think if you're kind of looking at the overall tech trade, we did see a little bit of de-risking pretty much all week here. I think that's also structural in nature, especially after the NVIDIA earnings. Usually the third day after NVIDIA earnings, we start to see a little bit of stabilization within the market as a whole. Tech should be and probably will be a part of that if that's going to come to fruition here. So I think you're still seeing kind of that rotation. Software is getting a little bit more love over the last 24 to 48 hours than technology here. But for CoreWeave, there is a lot of, once again, a lot of volatility when it comes to their numbers that they are reporting. This is the IGV. You can see it's coming back down to this 200 period moving average. This is going to be on the weekly chart. So this is technically an area of support for the software names. Let's see if people actually buy into this and have some follow through, or at least see a retracement back to the bounce to the upside.
Yeah, we've seen 3 days, I think it is, of nice gains there for the IGV. So let's see how things turn out today. KG, really appreciate getting us across some of the price action for us this morning. Thank you so much.